Welcome everyone to the week of October 23rd to 27th for the CFO Swinger Watch technical analysis video. All right, let's start off with the markets. So, the S&P 500 or SPY has definitely seen a rise in volume, as you guys can see here, for the past around 3 weeks. So, with this rise in volume came the selling of last week. Now, if you guys are watching this video before you guys have read the market summary, I highly recommend you guys to go back to the market summary first. Right? So pause this video and read what I said. Now, if you guys did read the market summary first, let me give you guys one single pointer that we need to be looking out for tomorrow, especially tomorrow. So last Friday, we ended up closing below this critical SMA, the simple moving average, the daily 200 SMA. And we haven't retested this specific SMA since March of this year. And when we did back in March, we reacted pretty harshly. We overreacted actually. And we ended up coming back down to a very heavy level of support around 381. And we created this V-shaped recovery and we continued to move up higher and higher and higher. And this led us to having a return so far on the year of around 10% on SPY. And for a little bit of more information, the NASDAQ is still up around 32%, or I believe it's 32 to 33%. So with that in mind, okay, to give you guys a little perspective, SPY has not come back down to retest this daily 200 SMA. And on Friday, it did. However, it closed below the daily 200 SMA. And if you guys remember, I always tell you guys this. Whenever we breach a major SMA, whether it be the 50 or the 200, we tend to have an overreaction first, and then we snap right back to retest that specific major SMA. So that's exactly what I believe could happen for SPY. However, we are talking about the 200 SMA. This is a major SMA that everyone looks at. And so when everyone is looking at this daily 200 SMA as a major area of support, this leads me to think that we're going to see some very good bounces tomorrow. Now, when we do get a bounce, I'm expecting us to at least hit and backtest this ascending support trend line that I just showed you guys a couple minutes ago. And remember, this ascending support trend line extends all the way back to October lows. Okay, I mentioned this in the newsletter with that link. So with this macro ascending support trend line, if we do retest it and back test it tomorrow based on the bounce that we can potentially have on the daily 200 SMA, I expect us to actually move back over this ascending support trend line. And that could be somewhere around 426. So if we come back to 426, I expect us to reject at 426 again. And this will allow the daily 10 and the daily 21 SMAs to catch up to the price. All right, because again, the last 2 trading days have really dropped the price and far away from the daily 10 and daily 21 SMAs. Remember, these two are my momentum pair. And so they like to be close to the price or the candlesticks. So again, this bounce should give us some sort of a brief relief for the bulls and also for shorts who want to take some profits, and also shorts who are on the sidelines who now want to take in a new position to the downside, of course. The only thing that I also want to mention to you guys is that if we are to continue this downtrend, there's one factor that needs to happen to help us give us that 100% confirmation that we will see a continuation to the downside. And that is this pivot low point right here where the arrow is marking on this weekly candlestick. So the low of this weekly candlestick is sitting at 420.18. So $420.18. We need to break below this low and close below this pivot low point. All right, it doesn't matter when we do it. All we need to do is break below this pivot low point and stay below this pivot low point in order to continue this downtrend. Now, obviously, without even taking a look at the specific pivot low points, last week's candlestick was bad, right? This is the weekly candlestick that we're looking at, and this looks really, really bearish, just like what we saw in the last few weeks of September, so mid to late September, right? So if we break below this 420.18 pivot low point, then we will automatically go back down to this weekly 50 SMA, which we also haven't retested since, can you guys guess? Back in March. All right, so this also kind of coincides with the daily 200 SMA. And you guys should remember that back in 2022 when we were both tracking the 50 SMA on the weekly time frame and also the 200 SMA on the daily time frame. Okay, so let me give you guys a brief reminder. All right, back in March, same 200 SMA and also back in 2022. All right, so these two SMAs on two different time frames, okay, two separate SMAs on two different time frames are kind of coinciding. And so this weekly 50 SMA is going to be a very good potential magnet for a lot of the shorts, especially for the people who have been shorting since the top of last week, which could be at 437, since this was a very critical resistance level and also a great price target after we got that nice bottom in the first week of October. So again, the confirming indication for a continued move to the downside will be a break below 420.18. Again, 420.18. I want you guys to remember that. And the potential target will be the weekly 50 SMA, which is currently sitting at $417.51, or if you guys just want to round down to the whole number level, 417.50. Okay, now again, the markets are closed, so the SMAs aren't moving, but by the time that we move back down to the weekly 50 SMA, the weekly 50 SMA should be sitting somewhere right above 418. All right, so again, tomorrow on Monday, I am completely expecting a nice oversold bounce, okay? And once we get that bounce, we can back test this ascending support trend line and maybe we reject off of it, but ideally I would want to see at least a solid bounce back to this 426 level and then reject off of it. All right, so there's also a chance that there could be a double bottom, but based on the price action from the last 3 trading days last week, plus the support that we got with the volume increasing as well, leads me to believe that this double bottom will most likely not happen unless we have some sort of a crazy bullish news or some very, very large moves in the bond market and the bond yields especially. All right, with that in mind, let's take a look at our first name, DG. So DG, we had an amazing return so far. Hopefully you guys have caught DG with me, especially when we got that very, very bullish news about the previous CEO coming back to Dollar General to potentially help it grow again. But overall, I was correct in the fact that the investor sentiment has drastically changed after this previous CEO came back in and the current CEO has officially been, well, stepped out of the spotlight. So with DG here, what I'm expecting to see is, well, there are two scenarios as usual since the market is a dichotomy. So Dollar General, the first most likely scenario that we can see for the next couple of days or maybe in just the next couple of weeks is that we can break out of this very small micro bull flag. And if we do, okay, to put it simply, we can see a long entry over 116.10. Right? That's very, very simple. And we can see this on the intraday time frames. Right? So on the 2-hour time frame, my favorite all-time hourly time frame, the 2-hour, okay, we can see a very textbook consolidation after a nice impulsive run up. And so far, we haven't made any attempts to fill in this gap up, which is a good sign in the longer term for bulls. So with this consolidation, we have allowed the 10 and the 21 SMAs on the 2-hour time frame to catch up, and I'd like to see that because when we have the 10 and 21 catching up to the price, there's a higher probable chance the price can make its next leg up move, especially since we're also on top of that making a nice micro bull flag, or on the 2-hour time frame, a simple bull flag. So all we need to do is break out of this descending resistance trend line, which should be around 116. Okay, this whole number level should be a nice breakout level. And so once we're able to get past 116.10, our entry will be taken. Okay, so that's the first scenario. Now, what's the second scenario? Now, for the second scenario, we need to go back on the daily time frame. So first of all, we've got a very good sign that yes, this bullish trend or this bullish reversal should continue because the 10 SMA has now crossed over the 21 SMA, which is a bullish crossover. Now, I also want to give you guys a look at the RSI, the Relative Strength Index, which is very, very rare of me, but I really want to show you guys this. So right before the news came out, this bullish catalyst, we saw a bullish divergence on the RSI and the price. It was actually a hidden divergence. So while the price was making lower lows and lower highs, obviously, we saw higher highs and higher lows subsequently on RSI, on the Relative Strength Index. And so this is what we call a hidden bullish divergence. So isn't it always interesting to see that there's some bullish catalyst or news that comes out right on time with the technical analysis that you're looking at and you're observing. So, this tends to happen a lot, especially on very liquid names like Dollar General. So that's something that you guys should take note of in the future. So with Dollar General here having such great coinciding and complementing signals from a positive news plus a very bullish technical indication, Dollar General should continue to move up higher as the relative strength has quote unquote recalibrated back to the normal levels between 40 to 50. Now, with the daily time frame here showing us that the price is now back to normal relative strength levels, there is a chance that we can actually break this bullish chart pattern, and by break I mean negate this bullish chart pattern by actually pulling back to the downside. And so that is the reason why I give you guys this first entry point here at long bounce at 112.10. So $112 is the next support level if we do pull back. So now you might be wondering, Andrew, why would the price pull back? Well, the 10 and 21 SMAs are now a bit too far away from the price. Yes, they are continuously moving to the upside and curling to the upside to catch up to the price. But there are instances where the price actually wants to move to the SMA first rather than having the price wait and consolidate and then the 10 and 21 SMAs are caught up. right? So that's exactly what happened on the 2-hour time frame, where the price continued to move sideways without making any impulsive moves to the downside or to the upside, which allowed the 10 and 21 SMAs to have room to catch up to the price. But on the daily time frame, that hasn't happened yet, while the price on the daily time frame, the daily candlesticks here, have been consolidating. So there's another high probable chance that the price can actually move down and pull back to allow the 10 and 21 SMAs to catch up rather quickly. Because if we do a pullback, the price will fall down rather quickly, because again, there aren't solid support in between 112 to around 115. So 112 will be a very, very good support level to be looking at. And by the time the price swiftly moves down to 112, the 10 SMA should have caught up by then to 112, and it should coincide and support the price, giving us a nice pivot at 112. And that is the reason why I gave you guys that long bounce entry at 112.10. Okay, and one last thing before we move on to the second name. On the weekly time frame, okay, the RSI is still in very oversold conditions, which means there's still more room left for this name to move up higher and continue this reversal higher, or at the very least, a nice oversold bounce. Okay, a multi-week oversold bounce, that is. So, based on that, I still truly believe that we can see a target of 120. And from where we are at now, that's a very good risk to reward ratio. However, I'm also keeping my eyes on the weekly 10 SMA, which is now almost caught up to the price. And right now it's sitting at this major resistance level at 123.50. It's coinciding actually with this level, because again, the 10 SMA on the weekly time frame is sitting at 123.51, which is very, very close, only 1 cent difference from the 123.50 whole number resistance level. So with that in mind, I would say ideally our maximum target will be a retest of the weekly 10 SMA. However, obviously the markets are closed, which means the 10 SMA on the weekly time frame won't be moving. So at the very least, a nice range to look for a price target will be from 120 to at least 122.50. All right. Now, to be even more optimistic, we can look at the weekly 21 SMA as our maximum, like ultimate maximum price target. But we're getting a little bit too ahead of ourselves if we're trying to do that, because the 21 SMA on the weekly time frame is not remotely close to the price or any of the candlesticks here compared to the 10 SMA. Okay, and we haven't been close since we started that sell-off back in the middle of May. All right, so hopefully that was a very in-depth technical analysis and a very nuanced view on DG. All right, but again, even if it's a nuanced view on DG, we're still net bullish. Okay, so both of these scenarios are still looking for a move to the upside. All right, and last but not least, let's take a look at some chocolate, HSY. So this is clearly a value name, but this is a very strong value name because HSY was around here back in March of 2020, the March lows. And this name has performed stupendously for the past 2 years, really. And it almost reached that very, very nice number of $300 if this one hadn't topped out back in summer of this year. So with HSY obviously not doing too good based on these weekly candlesticks here, I want to talk about the fact that this name is potentially at a very, very good pivot point and potentially, okay, I'll whisper here, a nice sale. So chocolate is on sale, guys. And why do I say that? Well, HSY is now sitting at this weekly 200 SMA. And now you guys may be thinking, oh my God, the weekly and the daily 50 and 200 SMAs are popping out everywhere. Yes, because a lot of names are now pulling back hard and have been pulling back hard for the last half of this current year, like HSY and like other value names. So HSY is at this weekly 200 SMA and it hasn't retested this 200 SMA on the weekly time frame since, guess again, the March 2020 lows, right? So it's been nearly 3 years. Okay. Oh, actually, let me take that back. It has been 3 years. So this is a very pivotal moment for HSY. Now, like I talked about with SPY on the daily time frame with the 200 SMA, okay? I expect HSY to have a nice overreaction to the downside if and only if we close below the 200 SMA like we saw in SPY. But this time is different for HSY. No two charts are the same. Remember that. And so for HSY, if we do close below the 200 SMA, and it almost did last week, 2 weeks ago, we can see an actual retest of a very major resistance level at 182.50, or if you guys just want to round up, 183. All right, the specific level is around 182.75. So if you guys want to round up to 183, that is completely fine. It's all up to you at that point. Very subjective at that point. So HSY, for me, if we do see a nice big large overreaction below the weekly 200 SMA to shake out any more buyers who may have attempted to buy at this 200 weekly SMA retest the last, I would say 3 weeks, including last week, we should be able to see a nice quick move to 182.50 or 183 if you guys want to use that level, and have a nice V-shaped recovery back to the upside. And that's exactly what I'm aiming for HSY. So HSY is going to be more of a investment, a new investment for me actually, to the long side. But for you guys, if you guys want to swing trade, or if you guys want to day trade this one as well for a potential pivot from the weekly 200 SMA, or if we do close below the 200 SMA and see that nice large pivot at 182.50 or 183, I have given you guys both options here. You can long the bounce at 190.10, which should be around the weekly 200 SMA when trading resumes, since the weekly 200 SMA right now has closed at 189.57. And so if we do start to see a bounce again this week, or maybe even tomorrow, we might see the weekly 200 SMA moving to the upside, and it should be around 190 by that time. All right. And so again, the second entry point, I just explained it. 182.55 will be the nice bounce entry if we do pivot at this major demand level or support level. And again, this level came by when it was a resistance level back in late 2021, right? And we haven't retested this level since late 2021, just like we haven't retested this weekly 200 SMA since March of 2020. Okay, so that is it for this week. Remember, being simple is the most prudent thing you can do during market downtrends and pullbacks. All right. Now, again, if you guys read the market summary, you guys should know what I truly think about this pullback. So make sure you guys read the market summary always first before you watch the technical analysis video. All right. So if you guys enjoyed this video, make sure you guys leave a like down below. And if you guys aren't subscribed yet to the channel, I don't know why you guys wouldn't be. Make sure you guys hit that subscribe button down below, and also, most importantly, hit that notification bell to know when I upload videos and also to be notified when I am live. Good luck, and I'll see you guys tomorrow morning.